Good morning. It is Thursday, January 3rd, 2013, and it's just now 6:35 a.m., and I am currently in a short trade that I just began right around the market open here. Haven't hit the first target yet, but I will talk more at you when we've got something to talk about. All right, we have hit the first target here. Now, notice that I'm using a Fibonacci grid here this morning. Since we're trading off of turning points here, one of the things that is critical for us is to figure out, first of all, how far the market's going to go before it reaches that turning point and turns around, and then also, how far is it going to go from its most extreme point to the next extreme point? So we'll talk more about that in the new course, but this is one of the cool things that we're going to be incorporating into our trading plan. So we're off to a good start here. I'll tell you more when we have something else to talk about. Okay, we still are attempting to hit the second target, but while we got a few moments here, we can talk a little bit about how we got in this trade. First of all, over here on the 13-minute turning point chart, you can see that our longer-term MACD is clearly bearish. It's more of a correction here, a resetting, if you will, because you can see the price is going very sideways. Still, it is down, and we also then had our stochastic starting a new downward move. So we had both of our oscillators on the longer term time frame looking pretty bearish. And over here on our 3-minute chart, we had a classic 1, 2, 3 top. This one got very close. This 3-point got very close to the number 1 point, but didn't take it out. So we had a 1, 2, 3 top. And so as soon as this thing started to sell off and broke below our red moving average, it looked like a pretty good shot. Plus, we flipped the parabolic in the process, and notice that our faster MACD on the 3-minute was below the 0 line, all the way back to here. And so when we got this spike up to the number 3 point, you can see the histogram didn't really even go above 0. So that pretty well told us that this spike was a fake out and that things wanted to go lower. Now, how much lower it's going to go and whether we'll hit any additional targets remains to be seen, but at least we got a good starting trade out of it. So, back at you when we have more to talk about. Well, we got stopped out and got essentially the minimum amount here. But we'll be back when there's something else to talk about. Looks like the market still wants to go down some more, so we might get another bite at the short trade apple here. We'll see. Okay, just entered a new long trade here. I'll let you know when we have something to talk about. Go ahead, put on the arrow here. Okay. Okay, well, that didn't take long. We've hit the first target, moved the stop, and we've also flipped the large parabolic. So that now confirms that our first turning point of the day is a low, and that's in keeping with what we have going on over here. We had a high, low, high yesterday. In the pre-market, we had a low, high, and now we have confirmed that our first turning point, is in fact a low. So we can go ahead and add it to our 3-minute chart as well. Okay, well, let's see how far up on the Fibonacci grid this thing will go. I've run the anchor line from the high of the previous momentum module on the larger parabolic down to our low, and right now we're hovering at the 100% level. I suspect that we'll go beyond that, however. Just how far will be interesting to see. All right, back at you later. Well, we got stopped out, so we've made just a little over the minimal on the last two trades, but obviously that's better than a loss or a sharp stick in the eye. So we'll keep plugging away here, and I'll be back when there's more to talk about. Okay, took another long trade here. Back to the 3-minute chart. We're getting close to hitting that target, but I'm not going to waste video waiting for it, so I'll let you know when we hit it or get stopped out. Okay, we finally hit the first target and moved the stop, and to do so we had to take out the 100 level on our Fibonacci retracement, which is pretty typical. So that was kind of expected. Now I'm thinking we're probably going to hit this next level, which is the 127 level, and coincidentally that is right about where our next target is sitting. So since we use Fibonacci numbers for our targets, Fibonacci parameters on our indicators, excuse me, got a small amphibian dwelling in my throat here. Okay. Anyway, I was about to say that because we have Fibonacci numbers and ratios all over our chart here, there is an interesting correlation that develops. So we shall see how much further this particular move will go. Obviously, time-wise, we're looking at a potential second turning point in the 9:30 Pacific time range. So we'll see where we end up around that time. Okay, back at you when there's more to talk about. All right, we hit the 127% level and also our next target. Our third and final target is sitting just a little bit above the 200% level. We may or may not reach that one. Notice that our resistance 1 level here using the pivot points is also in that vicinity. Here's our pivot point level right here. So we'll see how we fare, and back at you in a bit. Okay, we have temporarily reached and exceeded the 161.8% level based on the retracement of the highest high from the previous second previous momentum module and the lowest low of the directly previous momentum module. So we'll see if we make it to 200. In order to do that, we're going to have to get a bit more bullish here, but we'll see. Maybe we'll make it. At least we've hit a couple of targets here now, so we're going to earn more than just the minimum. But back at you when there's more to talk about. Okay, I closed that trade. It was still in progress, but it didn't look like we had much chance of hitting the third target. And we did break below the red moving average and flip the parabolic on our 3-minute here. So I closed that trade and have reversed positions to the short side. At least that's what I meant to do. That's what we meant to do. I think I just not quite awake here yet today, but we'll see. Well, it took a while, but actually finally hit the first target. Now, I sweated through a little bit of a bounce here, and it looks like what we had was perhaps a 1, 2, 3, 4, 5, and I was expecting this to be a corrective move, but I definitely thought it was going to get a lot closer to our trend-defining moving average. And eventually, of course, it did, but it had to go a little bit higher before it would do that. So actually, we need to change this and bring it up here to the highest point. And you can see then we have gotten down to almost the 61.8 level. Now we're hovering right around 38. So this is not easy to do, folks. It's very trying on the psyche, but let me show you why I did it. First of all, again, long-term MACD bearish the whole time. The long-term stochastic very overbought. When it's overbought, that means it's sooner or later got to come down. Notice here the longer-term MACD on the 3-minute never really went above the red here. The white stayed pretty much below the red the whole time, and on the 1-minute chart we see pretty much the same thing here. So we weren't getting a real strong dose of bullishness here. We had a little bit of divergence right here. We had a 1, 2, 3 formation that didn't pan out because the drop here did not take out the number 2 point. But we have a whole lot more divergence. We went to a higher high and again had divergence on both of the MACDs. So it wasn't as crazy as it looks to wait this one out. And instead of taking a nice hit, we actually have a little bit of a profit here. So there's method to the madness, folks. Sometimes you just got to know when to hold them and know when to fold them. And this looked like one of those times when we ought to hold them, and it worked out. So there you have it. Be back at you when we have something else to talk about. Oh, I guess we do have something else to talk about. You saw earlier that I was long, and when it didn't look like we were going to hit the last target, I reversed to a short position, or at least that was my intention. What I did was I closed the trade, and then I intended to go short, but what I did was I closed the trade, then I came over here and I went to reverse, because that's kind of how I've done it in the past. And I realized, well, that's not what I meant to do. And I found myself over on the left side of the dome, so I just went up here and hit the market order on the buy side, which of course was not what I intended to do. Oh, and by the way, we've just hit our second target on the short side. So we were temporarily going the wrong way, although as it turned out, it would have been the right way if we'd waited long enough. But in any event, I very quickly closed that trade and reversed. So whatever we end up with today would have been about 140, 150 bucks more if I hadn't made that little screw up. Now, I can assure you I will be much more careful when we're doing it for real here. But in any event, that was what happened, and I'm sure you saw that. So now we have confirmed our second turning point. It's this high here because we flipped the big parabolic. So let's go ahead and just put that guy in there. There's our high. And this will be our white turning point. And we are looking pretty good now. score-wise. And over here on the turning point chart, we can now confirm this high turning point as well. Oops, let's use the small letters. Okay, so there we are, and back at you when we have something else.